morning. Thank you for joining us. When we met, when your IPO went public, growth and margins were projected slightly different than what you've delivered ever since you've gone public. So what is leading to volatility? Is it volatility in raw material cost? Is it volatility in your distribution network? Because margins have been compressed.
Yeah, definitely. If you talk about the growth, probably the margins, the growth has come down a little bit this year. This year has not been that good, but hopefully the coming year and the year from now would be extremely good. The main reason of the growth has been one of the category in the snack has not done well for us. Ring, which we are the leader in the market, has not given the kind of growth we expected. All other products other than Ring has given double-digit growth for us. Margin, as forecasted earlier also, because of high prices of raw material, was down, and it was down to 7.1% from 8.5% last year. But we look forward to better margin and definitely get back to the similar kind of growth what we projected before the IPO.
All right. Let's also, Amit, talk about the margins. They've compressed, but the double-digit revenue growth continues. Can you tell us what has been the contribution on the volume front, as well as what is the reason for your margin compression in the quarter gone by?
So volume and value are both same in our case. There is not much difference in the both the things. But as far as margin is concerned, it was a lot of pressure on potato pricing and the oil pricing. The import duty was increased considerably last year, which reduced the margin for us. Going forward, the oil has come down a little bit, and potato prices have also come down. We hope to deliver better margin this year.
Into double digit, because from 9% you've come down to 7%. Your turnover is growing. If margin are compressed, whatever new capacity you're trying to add up, whatever volume growth you're doing is not getting added at bottom line level.
I think this should add up from this year. Last year, basically, there was a lot of pressure on the raw material pricing, as I mentioned, including laminate, edible oil, and potato.
So, as percentage of your total cost, how much is raw material? How much is distribution? How much is advertising?
So, around 65% is our raw material pricing in our total cost.
And what has been the decline in raw material pricing from the peak?
So from the peak, there is a 1.5% decline in prices, mainly because of potato and edible oil.
Okay. Tell us, Amit, where exactly is the business headed from here on? How is it that you're doing in new geographies? We understand that you recently acquired Amit Snacks as well, which is based in Gujarat. You're also looking at increasing your presence in the west and southern parts of the country as well. And also wanted to get a sense of how your newer premium products that you've launched are also doing in these particular markets.
Good. So as far as Awadh is concerned, we wanted to enter into the Gujarat market, which is the largest market by size in the country. To fulfill that ambition, we acquired Awadh Snacks in Q3, the fourth largest salted player in the Gujarat. The acquisition gave us access to Awadh's well-entrenched distribution network in Gujarat, which is being leveraged for Yellow Diamond products also. In addition, Awadh gave us a complementary product portfolio of pellet snacks, which we are looking to sell in market outside Gujarat. This was the maiden acquisition in our history, and we have focused our efforts to ensure a successful and seamless post-merger integration. We are happy to report that the effort is yielding good results. And if you see the last quarter, our growth was high double-digit number. As far as our premium product, the sweet snack is concerned, we are excited with the encouraging response from our sweet snack portfolio. The cookie cake product is being well accepted in the market, and we are adding 2 more lines into the sweet snack side. We plan to launch variants like cupcake and tiffin cake in the coming months.
Amit, recent Nielsen data shows that while PepsiCo has managed to retain their leadership in packaged snacks, ITC and Haldiram's have expanded their share. So how has Pratap Snacks done in terms of the overall market share?
So if we go to buy AC Nielsen report or Euromonitor report, the two reports are different. But as far as we feel, we have gained a little bit market share this year. Overall, the market has been subdued for this year. We feel that we have gained some market share, but we don't have the exact report on that.
Okay, fair enough. But what is your outlook on your market share? How do you plan to retain? What's the strategy in place?
If we can regain the growth what we did in last 5 years, barring the last year, I think we should gain good market share in coming few years. We're definitely positive on that.
We'll let you go on that note, Amit. Thanks much for joining in, for giving us a heads up on your outlook for the business.